This all ties back to one thing. We've stopped valuing financial freedom. A mortgage used to mean something that you worked hard to pay off. It was a step toward owning your piece of the American dream. Now the system treats it like subscription. Pay forever. The 50-year mortgage fits perfectly into that model. An economy built on continuous payments, not. What if I told you that one of the biggest financial changes in housing history could be coming soon? A 50-year mortgage. Yeah, you heard that right. Half a century. You could buy a home today, be 30 years old, and making payments until you're 80 years old if you live in that same property. I don't know. What do you think about that? Now, on the surface, it sounds like an answer to affordability crisis, right? Lower payments, easier qualification, but here's where it gets interesting and maybe a little concerning. Why are they pushing this now? Who really benefits? And what does it say about where our economy and housing market is headed? Stick with me because we're going to unpack all that, and I'll tell you exactly why this idea might do more harm than good for American homeowners. So here's what's happening. Over the last few weeks, major outlets like MarketWatch and Barron's reported that federal housing officials and political figures, including Donald J. Trump, are floating the idea of a 50-year mortgage. The reasoning? Affordability. Home prices are out of control, rates are still higher than average, and people can't qualify. So instead of tackling those root problems, which we all know what they are, they're saying, let's just stretch the debt longer. Think about that. When you can't afford a car, you don't negotiate the price, you extend the loan. That's the same logic being used here, everybody, and you have to read between the lines. You got to ask why now. The truth is, homeownership is at its crossroads. Prices are at record highs, insurance and taxes are eating people alive, and incomes just haven't caught up. And we see that every single day. Politicians can't risk the housing market slowing down. It's tied to consumer confidence, the GDP, and of course, the big one, elections. Banks and Wall Street don't want to slow down either. Mortgage-backed securities are a big business. Go down that rabbit hole. You'll find the carrot. So they need a way to keep the machine going, to keep buyers qualifying even when the math doesn't add up. Enter the 50-year mortgage. It looks like a lifeline, but it's really just more rope. So let's look at the numbers. Say you buy a $400,000 home at 6.5% interest rate. For all those rate people out there, you guys could fight about it in the comments. Just using a generic rate. On a 30-year mortgage, your payments would be roughly about $2,528 a month. And you'll pay roughly $510,000 in interest over the life of the loan. On a 50-year mortgage, payment drops to around $2,300. You're going to save about $228 a month. I don't like the word save here because you're going to want to listen to this. But now you're paying $826,000 interest. You don't have to save. I don't even know what to say. It's just mind-boggling. You didn't save anything. You just paid the bank an extra $316,000 for the privilege of a lower payment. That's not affordability. That's debt management dressed up as help. And the only ones smiling at the institutions collecting those payments for the next 5 decades are the banks. So how do we get here? Well, now we have to be fair. The reason this is even being discussed right now is because housing is broken. We all know that. Inventory is very high, and at least where I live in Florida. But if you start looking at the bigger things, building costs are high. Insurance in states like Florida is a nightmare, and wages haven't kept up with the pace of living. So instead of fixing the fundamentals like incentivizing builders to create affordable housing, reforming zoning, addressing insurance fraud, or helping middle-class families save again, they just move the goalposts. Stretch the loan, hide the pain. And if that sounds familiar, it's because we've seen this before. After 2008, they tried the 40-year loans to bail out homeowners underwater, and all it did was really just delay the inevitable. People didn't gain wealth, they just carried debt longer. I can't tell you how many times I do refinances and I see a deferred balance of $150,000 or $100,000 because somebody did a loan modification. Well, guess what? That gets stuck to the end of the loan. How are you ever going to pay off your house? How are you going to save money, right? Buying a house takes discipline. I say this a lot. You got to have discipline and make those payments. Just recently, I doubled up my mortgage payment. My goal in 10 years is to have it paid off. You got to set goals. You got to actually move your money and play with your money correctly in order to do those things. Here's the part no one's talking about, and I don't know if they will. When you stretch a loan to 50 years, you particularly erase wealth building. That's the purpose of buying real estate. You buy a house, pay it down, you build equity, and then you sell it, take that money, move it over to a new house if you want to, and start over. Okay. For the first 15 to 20 years on a 50-year mortgage, you're basically just paying interest. You're barely even touching your principal. That means your equity, your ownership grows at a crawl. Then think about this, with interest rates being where they're at, and you want to refinance in 2 years because rates went from 6.5 to, let's say, 4.5. Well, guess what? You're probably going to come out of pocket because you have not touched your principal. All right. You don't have the equity there to roll in the closing costs. So if you sell in 10 years, you walk away with a very, very little percentage of, growth from selling your house. You've been renting from the bank, unfortunately. So it's a subtle shift from ownership to permanent debt. That's all it is. And if this catches on, it'll probably push home prices higher because now more buyers can qualify on paper. Demand's going to go up, prices rise again, and affordability stays right where it is or even worse. So who wins in a 50-year world? The banks, who collect interest for 2 generations. The politicians, who get to say they helped homeowners. The developers and investors, who can sell overpriced homes to buyers who otherwise couldn't qualify. Everyone except the one person this was supposed to help, the American homeowner. This all ties back to one thing. We've stopped valuing financial freedom. A mortgage used to mean something that you worked hard to pay off. It was a step toward owning your piece of the American dream. Now the system treats it like subscription. Pay forever, don't question it. The 50-year mortgage fits perfectly into that model, an economy built on continuous payments, not ownership. It's not designed to help you own more. It's designed to make you own more. I'll say that again. It's not designed to help you own more. It's designed to make sure you owe more. So there are real ways to help people buy homes without turning them to lifelong debtors. Bring back responsible down payment assistance programs. There are a few. I help people with those. They make sense in certain scenarios. Expand affordable housing starts for middle income buyers. So what does that look like? Builders can do things, the government can do things to set limits on certain projects or communities to make it affordable. Like that would make more sense. Create insurance reform, especially in states where premiums are killing affordability. Florida's one of them. God forbid you're in a flood zone and you can't have grandfathered insurance. That insurance could be $10,000, $15,000 a year. And above all, teach people how to budget, save, and build equity. Because stretching the term doesn't make homes cheaper. It just hides the problem and shifts more wealth away from families and towards the institutions. So yeah, the 50-year mortgage makes a catchy headline, but it's not the fix, guys. It's not the fix. It's a distraction from what really needs to be addressed. We don't need longer debt. We need smarter policies before financial education and a system that rewards ownership, not the endless payments. I'm Matt with Anchor Home Loans, and that's your real talk for today. Don't buy into this 50-year mortgage stuff. They might be saying one thing because they want your money. Think about it. It gets reinvested. People get rich off it. It becomes mortgage-backed securities, 401ks, a whole bunch of different things. The smart buyer out there is going to understand. The lowest term you can get and qualify for on a mortgage is the best way. Even doing a 25-year versus a 30-year might save you about $100,000 in the long run. So for more tips and tricks and anything that you have at all, feel free to reach out to me at any time. I'd love to educate you. I'd love to have a conversation with you. And this has been Real Talk with Matt.